In progress.
Good afternoon, everyone. I'm going to allow just a few more moments for our attendees to come in and join us, and we'll get started shortly. All right. Thank you all for joining us on the first day of Procurement Month. Good afternoon to everybody, and welcome to today's webinar, The Right Step, How Minnesota Improves Contract Compliance. This is Minnesota's 2022 Cronin Awards finalist project. Thank you for spending some time with us today. We're glad you're here. This is the final webinar in our 2022 Cronin Awards webinar series, but be sure to check out www.naspo.org to stay informed on future webinars and events. At the close of today's presentation, you'll be asked to complete a very brief questionnaire. Your feedback is very valuable to us here at NASPO. And today's presentation is good for 1 contact hour. So to get your CEU certificate, simply complete the questionnaire following the presentation. Before we begin, I'd like to take a moment to explain the format of today's webinar. All attendees are muted. You can enter comments and questions in the chat box. If you'd like to ask our presenter a question, you can type it into the Q&A box at the bottom of your window. Questions will be addressed during the Q&A session after the presentation. I'm very pleased to introduce our speaker today. We are honored to have with us Jeremiah Alessio. He's an attorney compliance specialist with the Department of Administration, Office of State Procurement in Minnesota. He's got over 5 years experience in this role. He's worked closely with the initiative he's going to talk about today. And prior to his time with the state, he was in the private sector as a business owner. So NASPO is grateful to have you here with us. And with that, I'll turn it over to you, Jeremiah.
Thanks, Chadwick. I appreciate it. It's great to be here today. Again, my name is Jeremiah Alessio. I do go by Jeb. So, just for your information, excuse me. If you're welcome to call me Jeb or Jeremiah, either way. As Chadwick said, I am an attorney and the compliance specialist with the Office of State Procurement for the state of Minnesota. I am here today to talk to you about the Right Step initiative. But before I get started in actually going through kind of the initiative and the program itself, I first wanted to give a little bit of background of why this program, why now for the state of Minnesota. Well, it kind of came down to the fact that the state of Minnesota was involved in a fraud scheme that was discovered in one of our enterprise master contracts. And that really initiated a push for the Office of State Procurement to find effective and impactful ways to, number one, prevent issues that may initially be small from turning into big time-consuming problems. Number two, to catch issues early and in time to avoid major overcharges, issues, and scandals. And number three, to catch potential fraud or even innocent mistakes that threaten taxpayer dollars and our reputation as a state. And those are some of the things that we were really confronted with this fraud scheme. We had a lot of bad publicity as a result from it. One of the local news outlets in the state of Minnesota kind of caught on to the story, actually uncovered some information and background as far as the fraud scheme, and presented those issues in investigatory reporting to the state of Minnesota. And so really, in a lot of ways, it made us look bad. Besides that, we were also involved in some investigations, not only by this local media, but by the legislative auditor. You know, we had to answer a lot of questions from the legislature. A lot of our leadership had to go to the legislature and participate in committee actions, answer questions, you know, providing information for, you know, why this occurred, what steps we were going to take to kind of mitigate these things in the future. Beyond that, we also had a number of issues as far as taking bandwidth and taking accruing hard and soft costs essentially on our office because of data requests, both from you know, this media source as well as from other public sources, just kind of requesting information about this contract and really trying to uncover some of the issues involved with it. So, you know, that really led us to a point where we wanted to be proactive and really make sure that this type of issue wouldn't happen again to us in the future. So out of that, we did create the Right Step initiative. As you can see in this timeline here, that fraud scheme was uncovered in April of 2017. But I would just say, you know, that wasn't the end of it. It was a long and arduous process. I believe that we were actually involved as far as answering questions, and you know, there was settlement agreements and litigation occurring, I believe, well into 2020 and possibly even into 2021 before most of those issues regarding that one scheme and that one contract were resolved. So there was a lot of time and money that was consumed by this one issue. So again, to be proactive, the Office of State Procurement wanted to start an initiative that would effectively mitigate these types of issues from arising in the future. So in November of 2017, I was hired as the compliance specialist. I was essentially put in charge of starting a program that would allow us to review contracts and make sure that they were essentially getting off on the right step. So by March of 2018, we had constructed all of our policy documents, all of our procedural documents. We had developed a method through which we were going to generate lists of contracts that were ready and available for us to review, and a process that we were going to go through to review those contracts. So by April of 2018, we had all of those things completed. We were ready to kick off the program, and that was when our first Right Step case was started. We quickly realized that, you know, the program was pretty successful. We were finding things in our contracts that, you know, were kind of overarching issues and things that we could, you know, improve upon in individual contracts, but kind of overall as an agency and as an office in general. And so by August of 2019, we hired a compliance analyst to our team. And that person is essentially a part-time individual that works on assisting in the Right Step contract compliance program, providing background resources, doing rudimentary reviews, and really just assisting with the program as a whole. Beyond that, again, we recognize that there's always room for improvement in other areas. And so by September of 2021, we implemented and rolled out a second Right Step program called our Evaluation Right Step. So that's the history of our program at a glance. Here is just kind of a glance at the Right Step program itself, that kind of 10,000-foot view. Again, the general philosophy of these programs is to catch early and course correct. A stitch in time saves 9. And we really believe in that statement. You know, we've really found that when we catch things early, that prevents things from just getting out of hand and really allows us to reserve those hard and soft costs, reserve our bandwidth for other things. Whereas if, you know, we didn't catch these things, they become larger issues and consume a lot more of our time and money. So as I kind of mentioned, the two components of this program are the Right Step contract program and the Right Step evaluation program that I will be talking about to some length in this presentation. But before I get into that, I did also just kind of want to convey to you that these types of programs can be transmitted into other areas. We're also in the state of Minnesota in the process of kind of kicking off a third program in equity. We have the Office of Equity and Procurement, and they've always done a really great job of reaching out to target group vendors within the state of Minnesota, really trying to get them on board, get them certified, within our state programming system, and make sure that they're available to have contracting. However, based off of all that we saw with our success in getting those target group vendors signed up and certified as target group vendors, we didn't necessarily find that we were getting an exponential or a proportional growth in the amount of success those vendors were having in getting awarded contracts and getting substantial spend on our contracts. And so OEP recognized that beyond just getting those target groups onboarded and getting them certified as vendors with the state of Minnesota, they would benefit from having a little bit more work in onboarding those businesses and providing them with training, so they can recognize the things that they need to do to be successful in responding to a solicitation, and really getting those awards and actually having an impact on our contracting and our overall spend in the state of Minnesota. So that's another aspect of our Right Step program that we're kind of kicking off and starting to initiate. But to now just kind of get into what I would say is kind of our flagship compliance program, the Right Step Contract Review Program. So as I said already, the goal of this Right Step program is to get new contracts off on the right step. And we do that, again, by tracking usage of new contracts with new vendors, and essentially identifying once those contracts reach the thresholds of either 10 transactions or $100,000 in spend. And so we track that usage. Once those contracts have met those thresholds, we then essentially put them into a queue, and that queue identifies which contracts are ready for our compliance individuals to perform a review on. And then I will also just mention that compliance also offers ad hoc services to review things like expiring contracts and contracts with identified issues, which I will also talk about a little bit further. So just to kind of get into a little bit more detail about the contract review program itself, we're going to start again by looking at that queue that we've generated based on those thresholds that I mentioned to you of 10 transactions or $100,000 in spend. Once we've identified that, we're going to start a review of the contract. That review of the contract is going to be pretty complete. We're going to take a look at the entire contract itself. We're not necessarily going to read that contract line by line and scrutinize every word in it, but we're going to make sure that the contract is easy to read. We're going to make sure that it's understandable. We're going to make sure that the processes within it make sense and are in line with kind of how the contract itself could function. So we're going to essentially look at what I would refer to as the working elements of the contract, the portions of the contract that an end user or a customer would need to utilize in order to make a purchase on that contract. So we're going to take a look at what we would refer to as the contract release. And again, that is kind of the working element of the contract. It's kind of the clauses and the language and the elements of the contract that kind of go over what the contract is for, who's able to make purchases off that contract, what the process for ordering or setting up an account is, as well as including all of the pricing, all of the product information, all of those types of things under the contract. So that's going to be in our contract release. We're going to review that document again, make sure that everything makes sense, make sure that there's not things that conflict. We're going to take a look at the purchase orders under the contract again to make sure that they have enough information in them, that things are in alignment with the contract itself, with the contract release. We're also going to then take a look at a number of transactions. And depending on the structure of the contract, we may look at all of the transactions under the contract, or we may look at a portion or a sample of transactions under the contract. And we're going to do that to, of course, make sure that we're getting our products or services at the right prices. But we're also going to take a look at things like the quote and invoice for a number of reasons, to make sure that they're in alignment with the parameters of the contract, that pricing is correct, that we have correct vendor information, we have correct end user information, that our purchase order numbers are on there, all those types of things. So again, we're going to take a very holistic view of the contract in its entirety. Once we've gone through that process, the person that reviews the contract is then going to generate a report that's going to identify findings within the contract. So we're kind of going to just take a look at what's going well in the contract at a very basic level. You know, what is working in the contract, what things could be better about the contract itself, what items or transactions did not line up, you know, whether that's just straight up pricing under the contract isn't lining up, or whether it's just certain elements of the transactions that make it difficult for us as a compliance person and also probably as a user to be able to utilize that contract. And then again, we're going to take a look at what things might be difficult to understand under the contract, what kind of troubles we had in utilizing the contract. And again, as a compliance individual, I'm going to come from the perspective of a person that is a customer under the contract and trying to use the contract to make a purchase. That's the lens through which I'm going to look at this contract of, you know, what other things would be useful in this contract in order to make it more usable to me. So once we've identified those findings of things that, you know, are not working so well, we're going to provide recommendations in our report. You know, we're not just going to identify things that are wrong with the report and leave that contract owner hanging. We're going to make sure that we provide recommendations for ways that we can improve that contract and the best practices for that contract moving forward. You know, that may be additional clauses in the contract. It may be additional instructions in the contract. It may be a restructuring of the way pricing is done, or how we name things within the contract. It may be clarifying language or processes. So we're going to essentially identify findings, and then we're going to provide a recommendation moving forward for every finding that we have in that report. Once we've completed that report, whoever has performed the review is going to then provide the report to whoever owns that contract, and they're going to work with any of the interested parties to resolve those issues. So again, we're not just going to leave those individuals hanging. We're going to provide whatever assistance is requested from us to essentially resolve the findings that we identify in our review. So, you know, we're going to help with any sort of coaching to contract customers, owners, or vendors. We're going to provide to them best practices moving forward under the contract. We're also going to, if necessary, work with them on recovery of any overcharged transactions. And that's something that we do see. You know, unfortunately, we do identify transactions in our contracts where our users have been overcharged. And so we're going to work to recover any of that money for our customers, as well as make sure that, you know, we put some sort of process in place, or we have some sort of assurance in place that whatever issue led to those overcharges is going to be corrected in the future. So I did mention that we had the Right Step initiative, as well as the fact that we do offer ad hoc review services to our customers. And so I also just kind of wanted to give you a really high level overview of what the distinction between those two processes might look like. So to start with, the Right Step program is what I've been describing. It's a program that's initiated by OSP compliance, and it's based on a generated queue. Again, it's going to start with those new contracts with new vendors. It's going to have that threshold of 10 transactions or $100,000 in spend. And essentially those contracts are going to be identified, and they're going to be the ones that are added to our queue ready for review. The other thing that I would just say that kind of distinguishes between a Right Step and an ad hoc review is kind of our process. In the Right Step initiative, the process is going to be more standardized. It's going to be more high level, and it's going to be more holistic. We're going to take a really high level review of that contract and just kind of determine, you know, what things, again, are going well and what things could be going better. To some extent, of course, we are going to determine how we conduct a review based on, you know, what type of product it is, or whether it's a product or a service contract, and then kind of how the contract is structured. You know, whether it's a limited number of transactions that are very high dollar items, or whether it's you know, relatively low dollar value items but a lot of transactions, or whether you know, there's a lot of accounts under it, or whether it's just product purchasing. So to some extent, that is going to determine kind of the scope of our review, but it is going to be more general. That as opposed to an ad hoc review. Again, an ad hoc review is something that is going to be initiated by a contract owner or a customer under the contract. And so because of that, that is really going to distinguish how we approach a contract. Rather than it just being a queue and us taking that holistic approach to it, before we even dig into a contract, we're going to make sure that we meet up with that contract owner and meet up with that customer if there are any involved, and really kind of talk through what the perceived issues are under the contract. We want to get an idea of the scope of the contract. Is it just one product? Is it just one account? Is it just one agency involved in this? Is it a consistent kind of thing? We want to get an idea of what the parameters are of these potential issues so we can kind of tailor the way that we're going to review this contract based on what those perceived issues are. Again, is the scope one customer, some customers, or all customers? Are the issues consistent or random? Is it one product that is just continuously being overcharged, or is it just kind of like there's a lot of issues, the vendor just seems like they're all over the place, and we may need to provide that vendor with a significant amount of training on just performing under a public enterprise contract. So those are kind of just an overview of the program itself as far as the Right Step program. Now I'm going to kind of get into a little bit of the common issues that we see in our program and those that we've identified as overarching issues. So the first one that I would say is a lack of clarity in transaction documents. And this can fall into a number of categories. The first one that I would say is just not getting enough information in our transaction documents. And that's the kind of thing, we can see in any way, shape, or form. If we've got a pretty complex product list that involves perhaps a base product and then additional options, something like that, oftentimes we'll just see bulk pricing for those types of transactions where we really want to see things itemized and broken down by individual products. Similarly, if we have a service contract where there's hourly rates, oftentimes we'll see a separate line item that is just for for the number of hours, and it'll just say labor, and then it'll have a price for that labor. Where we want to see the number of hours broken down, we want to see the labor type, we want to see the labor rate, so that again we can confirm that with our contract price schedule and make sure that we're getting that correct hourly rate. The second thing I would say under lack of transparency is something that I've kind of already mentioned, but is just inconsistent naming. And that goes to the consistency of naming conventions across all of our documents. We work really hard to put our contracts together. We work really hard to work with vendors to put a price schedule together. And a lot of the times we just unfortunately see that between our price schedule and our contract, and then the documents that are utilized under the contract, we just don't see consistency sometimes. So it makes it very difficult, obviously, for the compliance team to confirm pricing. But if we're having difficulty with that, it can also be assumed that the customer is having difficulty confirming pricing as well with that inconsistent naming. And that can come down to literally just the naming conventions being completely different. Whether it's having SKUs on a price schedule and then item numbers on an invoice, or having item descriptions on a price schedule and then literally the item name on an invoice. It's just a matter of, we want to make sure that what we see on the price schedule is going to be consistent with what we're going to see on those vendor documents to make it easy to confirm our products, our services, and our pricing. The last one that I would just briefly mention as far as lack of transparency is not providing the right documentation. And that really just comes down to, in a lot of circumstances, people just not following the right process. We see a lot of instances where we'll get a transaction document, and it is literally just an email from a customer saying, hey, I need 4 Dell computers and 6 wireless keyboards. And the vendor will write back and say, sounds good, we can provide that to you. That's going to be X dollars. And for their purposes, that essentially is the request for the product and the quote from the vendor. which, that's just not in line with the process that we've laid out in our contract. And we need to see actual documentation in a quote, in a request for those particular items in that process. So those are things that we want to correct as far as clarity in our transaction documents. The second thing that I would say is off-contract purchases. And off-contract purchases aren't the largest issue. It's not a huge deal, but it is something that we want to make sure we correct for a couple of reasons. Number one, it creates inaccuracies in our usage reporting. The state of Minnesota, like any other state or public entity, I imagine, wants to track usage of its contracts. We want to know who's using the contract. We want to know what they're purchasing under the contract. We want to know how much money is being spent on the contract. That helps us in modifying the contract, in creating differences in future iterations of the contract, and just having a good idea of how necessary this contract it actually is for our purposes. The second thing I would say that we want to look at for off-contract purchases is it creates problems for our customers because they're in all likelihood going to be unable to enforce the terms of the contract for an off-contract purchase. Again, we work really hard to go through negotiations with vendors to get a complete contract in place. And if a customer is making a purchase and a vendor is allowing an individual to make a purchase for a product that is not actually on a contract, we have a pretty hard time arguing that the parameters and the terms and conditions of our contract that we have in place are going to apply to that particular product. And so for that particular product, our end user, our customer, is likely going to be at the mercy for the vendor for whatever their terms of purchase are for that contract, or excuse me, for that product. And lastly, the last item that I have here is overcharges. And this is obviously, kind of the one that's going to set off sirens and alarms and those types of things. And we do see overcharges. That's something that is honestly not completely uncommon to see on our contracts. And again, that's something that we want to mitigate and we want to identify very early on. We see our overcharges in a lot of different ways, but again, for the purposes of this presentation, I'm kind of going to put them in a couple different categories. Number one, we see systemic overcharges, and I would kind of identify those as in a couple different categories. Number one, if we're looking at a product-based contract, that product-based contract may have thousands of products underneath it. That vendor that's selling the products may have essentially a product platform that is kind of automated. And so if that vendor enters in a pricing for one of those thousands of products or a few of those thousands of products within their system, every time we make a purchase of that item, we're going to get it at an incorrect price. So that is something that we see we would identify as systemic. The other thing that we would identify as systemic is, again, something like for a services contract, if for whatever reason we have a customer that reaches out for that vendor may have a customer service representative that isn't necessarily familiar with the contract, or our customer may not identify the contract appropriately. And so for whatever reason, that account may get set up not as a contract account. If that's the case, thereafter, their monthly charges for whatever service that they're requesting is likely not going to be in compliance with the contract month after month. And so those are things that we identify as systemic. Once they're identified and once the scope is identified of those kind of systemic issues, they're normally pretty easy to resolve. The second one that I would identify is manual overcharges. These are oftentimes usually one-off issues, and they oftentimes, unfortunately, usually stem from procedural issues or customer service issues. A lot of the time they occur, from our experience, for larger purchases. Again, for purchases oftentimes where there's kind of a base item that the customer is purchasing that involves a lot of other intricacies or options or those types of things. And again, it can be a situation where they go to place an order. Whoever the vendor representative is may not necessarily be as completely aware of all of the terms and parameters of our contract. And so they may essentially just charge us for an option or charge us for freight or delivery or some sort of specific thing on that invoice for that purchase that is just not in line with the contract itself. It's going to be likely a one-off issue it is kind of a user error. So if it's just one thing, those again are usually pretty easy to correct. It's just a matter of identifying that one option and making a recovery on it. But oftentimes those manual things, again, like I said, can be more of an issue of a process, a procedure, or a customer service issue. And so oftentimes those procedural and customer service issues are a lot more difficult to remedy and really take some time in working with the vendor to make sure that we can resolve. The last type of overcharge that I would just like to point out are ones that I would say are unique to the public sector. The example that I always give is taxes. The state of Minnesota, probably not unlike a lot of other states, pays our sales tax on purchases directly to the Department of Revenue. And that is for almost all products that we purchase. However, if you're a private entity, that is not common knowledge necessarily, and that is not part of your common practices. A lot of vendors are going to have invoicing systems that are essentially set up to automatically calculate sales tax for a product just based on the location of the purchase. And so they're going to have that, again, systemically in their invoicing platform. And so just automatically calculate sales tax. Again, that's something that is, a pretty innocent mistake, but it's something that we do see fairly regularly and something that we just need to be aware of as part of a public sector procurement outfit. So those are some of the problems, the most common problems that we see in our contracting. The next thing I'll move into is some of the steps that we've already taken in an attempt to mitigate some of these issues. The first thing that I'd say is we've really taken a look at our contract releases and really tried to work those contract releases and revise them to base how we structure things on what the product is and how the pricing is going to be laid out. We are going to handle product naming and pricing structure differently for a contract for snowplows versus a contract for rug cleaning versus a contract for buying software and hardware. The process for making those purchases, the way that a price schedule is going to be structured, the process for setting up an account is going to be different based on what you're purchasing and what the process is for purchasing that product. So we're really going to pay attention to that. We're also going to handle a contract with products direct from a manufacturer differently from a contract involving, for instance, a value-added reseller. For a direct from manufacturer product contract, we're probably going to be in a discount off pricing scenario where that manufacturer is going to be providing us with their retail price, MSRP, and essentially saying, we're going to give you a discount off of this. Whereas with a value-added reseller, we're probably going to structure the contract more in a cost-plus pricing design, where we're asking that VAR to provide us with the cost that they get that product from the manufacturer, and we're essentially allowing them to add on a percentage increase to the cost that they pay from manufacturer. So those are things that we're really going to pay attention to in providing instruction and providing processes within our contract release. The second thing that I would say is we have implemented some additional training for OSP and enterprise buyers on using our master contracts. We have a fairly in-depth training for any of our potential buyers that want to get certified to make purchases in the state of Minnesota. And we have done a lot of work to add training to those potential buyers to make sure that they understand these processes and they understand these documents. So we have implemented an exercise for those potential buyers to go through, have a look at a mock-up of a contract release, and essentially be required to answer questions about that contract release. Make sure that they understand what it looks like, make sure that they understand the essential elements of that contract release, and that they're able to really follow and understand how they would make a purchase. Likewise, we have an exercise where we're then going to utilize that contract release and have a mock-up quote that a customer may see if they were using that contract release. And so we're going to have that mocked up quote. That initial mocked up quote is going to have a number of errors, omissions, those types of things in it. And we're essentially going to ask that prospective buyer to take a look at that quote, take a look at the contract release they've already been made privy to, and identify any issues or omissions that they see in that particular document and how they would correct them. And this essentially gives us the knowledge that those prospective buyers have the ability to go through these documents and identify issues and correct them and make sure that they're getting products in compliance. And it also, just gives them that basic look at those so they can familiarize themselves again with those documents and the processes themselves. The next thing that I would say is a really good thing that we've done is we have implemented a process whereby we now vet those vendor documents as part of our solicitation and award process. So now our vendors, if they want to provide a response to a solicitation, they also, as part of their response, need to provide us with any quotes, invoices, or other documents that they would be utilizing as part of the contract. And we do that for a few reasons. Number one, we want to make sure the document has all the information we need. That's something that I've already kind of hit on to a good extent in this presentation. We want to make sure that things are itemized, labor is itemized. We want to make sure that our purchase order number is on that document. We want to make sure if there's delivery that we've got a start and stop point for delivery so that we can do a correct calculation of mileage for delivery pricing, all of those types of things. Number two, we want to make sure that there are not any additional terms and conditions on these documents. We work, again, very hard to get to an agreement with a vendor. We have our terms and conditions in our overarching agreement. We want to make sure that these documents that are kind of ancillary and the working documents for the contract are not going to conflict or derogate with our overarching contract. So, we want to see those documents beforehand and make sure any of those additional terms and conditions that a vendor might have attached to their quote or invoice are eliminated. Number three, we want to set the baseline for document expectations under the contract. So again, we go through that process. We look at those vendor documents, the quotes and invoices. We get them to the point where they're acceptable to us. They have the necessary information in them. They don't have any additional terms or conditions that we don't want in there. We then attach those documents to our contract release for viewing by our customers. And again, this makes it so our customers have an expectation for what they're supposed to see when they make a purchase, but it also sets that baseline. It allows us for, in those situations where we have a customer who gets a invoice that has, 1, 2, 5, or 10 additional pages of terms and conditions in them, we can then go to that vendor and say, no, you provided us with this invoice as part of your response. This is the approved invoice that we have. This is what they need to look like. This is what our expectations are for the future. The last thing that I would say is we have really tried to focus on compliance to a great extent in our newsletter. We do have a newsletter that goes out to our CPV customers and our agency customers. And we've really tried to have some articles in there and some coaching tips in those newsletters that kind of focus on some of the overarching issues that we see in our reviews. What things you should be looking for, what your best practices are, what things you can do to mitigate these issues moving forward. Okay. So those are steps that we've taken. Then I will now just kind of briefly get into metrics. So the first metric that I have here, over $700,000 in agreed upon recovery for the Right Step contract program. And when you'll notice in there that it's in agreed upon recovery. And the reason that we have in agreed upon recovery is we have agreements in place to recover over $700,000, but we do allow our customers the option for how they would like to recover that money. And so in some circumstances, a customer may just want a check cut to them. In other circumstances, a customer may prefer to have just credits to their account and just have continued crediting on their account until essentially that runs out, and then start paying for the products or services if it's something that they know they're going to continue to purchase or a service that they know they're going to continue to utilize. And so that is actual dollars that we have identified on contracts that we've reviewed, and money that we have recovered or in the process of recovering for our customers. The second thing that I've identified here is cost avoidance. And I don't actually have a number for that because in all honesty, our cost avoidance and our cost savings for future are fairly incalculable. Just to provide you an example, I had mentioned before that we implement cost plus pricing in some of our contracts. And I don't want to get too deep in the weeds here, but one of the things that we identified on some of our contracts that were going to be structured for cost plus pricing is that when we received responses from vendors, we noticed that occasionally we were receiving different methods for calculating cost plus pricing being proposed by our vendors. And the way that I would kind of break this down is a method of calculating increase by multiplication or by division. And so just to kind of get a base level here, if you've got a product that's $100 and you're offering a 5% markup or increase on that item, if you're looking at what we would identify as the multiplication method, you're going to take $100, you're going to multiply that by 1.05, and you're going to get the result of $105 to the customer for that product. However, what we did see in some of the responses from our vendors is a different method that I would call the divide method. And essentially what the divide method does is it calculates profit to the vendor. And in doing so, rather than multiplying by 1.05 in that same scenario, you're going to take that $100 purchase, you're going to divide it by 0.95. And if you do it in that method, you're going to get the end price to the customer of $105.26. And so it's a difference of 26 cents. It doesn't sound like a big deal, right? But if you're talking about a contract that has $50 million in spend per year, that 26 cents per $100 is going to result in about $130 in additional charges per year. So again, when I say that cost avoidance and cost savings is really incalculable, those are the types of things that we catch sometimes. And if we catch those things before they become an issue, we are really saving a lot of money and avoiding a lot of costs, not only in the overcharges themselves, but again, in that back-end compliance, in those hard and soft costs in resolving those issues, if they were to persist for years. The last thing that I would just kind of identify, which again, I'm not going to get into really great depth on, is the ability to track trending data. And the reason I'm not going to get into very great detail on this is that this is information that we essentially have the ability to track. And on some level we do track, but we don't consolidate in any way. And to this point, we haven't really utilized for our overarching program. But essentially performing these reviews and identifying these issues does allow you to track data at an agency level, at a contract level, at a vendor level, and a buyer level. So if you were to implement a program like this, you could essentially codify all of your issues and by transaction, essentially identify whether it was a good transaction or whether there was particular issues with that transaction. You can then consolidate your data and essentially filter that data based on agency or vendor or buyer to basically identify how well that agency is doing. What percentage of transactions do they have that they're overcharged on? Or on the buyer level, if you are considering a buyer, you could look at, we've reviewed 200 transactions for that particular buyer, and they have X percentage of transactions that are not in compliance with the contract. And so you can work to, at any level that you want to really kind of mitigate those particular issues. So I've talked about the Right Step contract program. Now I'm going to just briefly get into the Right Step evaluation program. Our professional technical contracting team provides oversight and assistance to our agency partners on intellectual contracts. That group had identified just through various conversations and questions that there appeared to be some room to grow and get better in performing evaluations at the agency level. As a result of that, our professional technical team created a focus group that met quarterly for over a year to work with our agency partners and discuss common issues and questions that those agency partners have with the evaluation process. So we wanted to meet with those agency partners and learn about their processes. Who's involved in those processes? Is that consistent? Do you use the same documents for every evaluation that you perform, or do you kind of make up the documents every time as you go along? Is your evaluation procedure consistent for every RFP or every solicitation that you put out there? Where do you struggle? Where can we provide more information to you to assist you in this process? And so out of those discussions and out of that focus group, we created an evaluation toolkit for our agency partners that has a number of resources for them. It has things like consolidated documents for the evaluation process. We've got our evaluator agreements in there. We've got standardized evaluation scoring sheets for different types of evaluations. But we also have things like FAQs in there for our agency partners, and different timelines depending on the complexity of the project that they're working on, as well as checklists for our agency partners to utilize to make sure that they were conducting the process correctly. Beyond that evaluation toolkit, we also created the Right Step Evaluation Review Program. And this Right Step Evaluation Program, it requires our agencies to send evaluations to the PT team prior to negotiating a contract with an awarded vendor. We're not going to stop evaluations with a proposed vendor or an awarded vendor, but we want to make sure that we get a look at those evaluation documents and assure that the evaluation process was conducted appropriately before we execute a contract with that vendor. So our team reviews the evaluation scoring documents to assure, number one, that they followed the process outlined in the RFP. Number two, that they scored the vendors based on the RFP criteria alone and through an apples to apples comparison of costs. And number three, that the scoring was calculated correctly by the RFP administrator and did not contain any clerical errors. Once this review continues until an agency has successfully submitted 3 evaluations. Once we have reviewed 3 separate evaluations and determined that they are performing the evaluation correctly or have a passing score, we then move them into a slot where they thereafter have to provide us with 1 evaluation a year for our review and a passing score. So I don't have a lot of program stats for the evaluation program. It's a relatively new program, and to be honest, because of COVID and because of bandwidth available within our team, we haven't been able to get really deep and be really consistent with this program. But we've identified scoring criteria, and within those scoring criteria, we require that a agency evaluation scores 75% or higher to pass. At this point, we have an average score of 85.85 out of 100. And to this point, of the 27 reviews that we've completed, we've only had 3 failed reviews that have had to go back and do something over. But even with that 85.85 average, in that circumstance, we're still going to be providing guidance on how to improve that evaluation, and we're still going to be providing best practices to that agency partner. Just a couple of other things to quickly kind of move through in my presentation. Just some overarching benefits that we realize from the program. I would say a heightened level of engagement with our contract customers, contract owners, and vendors. Both of these programs have really allowed us a lot more face time and a lot more honest conversations with all of our partners that we're involved with in contracting. It allows us to have difficult conversations. It allows us to be more a part of their processes and provide them assistance and let them know that we are available. And then with that, I would say that has allowed us to have a heightened level of confidence for our office, our stakeholders, our customers, and our vendors. Our customers know that we're doing this. Our customers know to some extent that we have their back. you know, a lot of our customers may not have the knowledge or the bandwidth to perform these types of reviews and catch these types of things themselves. So I think it does give our partners more confidence in their purchasing to know that we're back there and we're taking a look at these things. But it also makes it so they know that they can reach out to us if they do have an issue. You know, it makes it so they know if they find something that looks wrong in one of their purchases, that we're out there and that we have our finger on the pulse and can really provide them with assistance on how to resolve their issues. The other thing I would say as far as vendors go, I think it has really improved our relationships with a lot of vendors. You know, that may not seem like the case, you know, on its face. But that's something that I was initially concerned about, you know, having those conversations with vendors, because essentially you're going to a vendor and telling them that they're doing something wrong. But, you know, I found that especially when you're framing things correctly in your conversations, a lot of the time a vendor is going to be appreciative. You know, I've had conversations with vendors over and over again where they recognize that working with the state, working with a public entity is a totally different animal than working in the private sector. You know, there's other elements, there's other procedures, there's other criteria in place for public procurement that are not necessarily going to be there in the private sector. And so I've had those introductory conversations with vendors, and vendors just really straight up tell me, like, you know, yes, we're absolutely struggling here. You know, we're not used to having these additional things in place, and we're admittedly struggling to deal with some of these things. And, you know, that really opens things up for us, particularly because we come from the perspective of, we're not going to go to that vendor and say, you're doing this wrong, you're in breach of contract, you need to fix this. We're going to go to that vendor and say, you know what, it looks like you're struggling in this area. It looks like in this particular process or with this particular product line, you're having some difficulty getting things right. You know, like, how can we improve this? How can we make that better? And again, you know, that really just improves our vendor confidence. It really makes our vendors know that we're there and we want to work with them, and that we value that relationship and want to make that relationship a long-lasting one. So the last thing that I have to go on here, which I'll try to make pretty quick, is just some brief comments on where do you start. If you're looking to start something like this, I would say the first thing that you need to look at is identifying your need and what bandwidth you have available. And I think anything that you do is going to largely be contingent on those two items. You know, as I've said throughout this presentation, we identified that we were going to take a look at new contracts with new vendors, and we were going to take a look at them after there was 10 transactions or $100,000 in spend on them. And that was largely because that was what we felt we were comfortable with as far as our bandwidth. You know, I'm essentially the only full-time person that works on the contract compliance piece of this. And, you know, so there's only so many reviews, there's only so many contracts I can get through. So you really need to identify what need you have, if there's specific areas, and then what resources you have available to contribute to that particular need. Beyond that, I would just say, start by taking a look at your high visibility contracts, your high usage contracts, your high dollar value contracts, and your expiring contracts. You want to take a look at those high visibility contracts, because in all likelihood, those are the ones that are going to get you in trouble. You want to identify the contracts that if you can say to yourself, the public would be interested in this, or the legislature would be interested in this. If something goes wrong on this contract, people are going to be interested and they're going to want to know about it, and the news is going to be interested and they're going to carry this story. So, you know, those contracts that have high security issues, you know, or things like that, where again, if something were going to go wrong, there's going to be high visibility on that contract and high interest. The other thing I would say, which, you know, they may sound kind of common sense, is look at your high usage contracts and your high dollar contracts. You know, on those high usage contracts, you want to make sure that those first transactions are going to get off again on the right foot. If there's just a ton of transactions, thousands of contracts per year, you can usually mitigate most issues that you have with a high usage contract just by looking at the first couple hundred transactions. Usually if there's issues, they're going to come out pretty quickly. And so you can really mitigate a lot of issues in a high usage contract if you just look at them very quickly and get any of those sort of things ironed out. Same thing with high dollar value contracts. Those are the ones that you don't want carrying out. You don't want issues carrying over year after year after year. You want to make sure that you're identifying transactions early. You're taking a look at those first few transactions and making sure that they're getting off again on the right foot, so that if there are any issues with individual transactions, you can work with that vendor, you can work with that contract owner to resolve them and mitigate them so that they don't become large overarching issues 3 to 5 years down the line of the contract. And then the last thing I would just say is take a look at your expiring contracts. That is oftentimes a perfect time to take a look at a contract and perform a review of it. If you've got a contract that's been in place for 4 years and is expiring at year 5, and you're getting ready to start an RFP and getting ready to solicit that contract, take a look at it. Take a look at how it's functioning. That's a great time to see, what things are going well, what things you want to carry over to the next contract, and what things aren't going so well, or what things the vendor leaves something to be desired as far as their performance under the contract, because then you can kind of tailor the way that you're going to construct that RFP, tailor the way that you're going to enter into negotiations with vendors based on your knowledge for how that previous contract was really functioning. So that's really what I have for you today. I think my timing is decent. I've got a few minutes for some questions here. So here's my contact information, and I will be available for questions.
All right. Got a question or two for you here. I believe you may have just touched on it a couple of minutes ago, but how did you come up with the threshold of $100,000 or 10 transactions as the threshold for the right step?
Yep, and yeah, so that was, kind of as I said, that was just kind of that that need and bandwidth evaluation, and that literally just came down to meeting with my leadership and identifying, the scope of all of the contracts and, what that looked like, and then kind of narrowing that down to, okay, we clearly can't look at every single contract here. We have thousands of contracts. So where do we go from there? And then it was kind of just a process of whittling down that scope and saying, we can't look at all contracts. So let's just look at new contracts with new vendors. And then once we identified that as something that was probably pretty reasonable, we then said, well, okay, we're not going to wait until there's, 4 or 5 years down the line. So let's set some sort of parameters. And so essentially we just started running reports, and we started doing some kind of reporting on, different thresholds, and identifying how many, what our scope is going to be based on different thresholds. And we essentially got to the point where we identified that those two thresholds of 10 transactions or $100,000 were still going to be a pretty substantial scope that was going to allow us to take a look at a lot of contracts, but was not going to make it so it's overwhelming to the point where we're just going to, we're just going to have an endless amount of work and really not be touching on as many things as we wanted to.
Thank you. So when this process started, it was just looking at new contracts, use of contracts, and then you expanded it to cover RFP evaluations to go back and analyze those. Are there plans to grow this any further to maybe other categories of purchases or solicitation types, or even other agencies or entities within the state?
I would say we don't have any concrete plans in place for the development of any new programs. At this point, we are fairly limited by bandwidth. I mean, especially entering the COVID era, our agency, our office very dramatically had to kind of change our focus. And so that took a lot of our bandwidth, even with me. I was hired essentially to run the contract compliance program, but with COVID, I really had to direct some of my attention to a lot of other areas. That being said, we're always making suggestions for other areas that we can expand to. And I would just say, particularly in the expiring contract realm, that's one of the areas that I think we could really develop once we have additional bandwidth, once we have additional resources. I think that would be a really beneficial area for us to start creating criteria for contracts that we could look at that are expiring, to make sure that our next iteration of the contract is the best that we can possibly put out there.
It looks like we got one question in the chat here. Are there evaluation toolkits available? So do you have like any templates or guidance or anything for that kind of, I'm assuming, RFP evaluation review?
Yeah, we do have a complete evaluation toolkit. As I said, it contains standardized evaluation scoring sheets for what we would refer to as a standard evaluation, as well as a two-tiered evaluation. Like I said, it has timelines for what time you should start a process, depending on the complexity and the scope of the project, and kind of where you should be at different points. When you should create your evaluation criteria in the process, when you should bring in your subject matter experts, when you should start getting your evaluation team together, those types of things. We have frequently asked questions. Yeah, I mean, we have a fairly complete evaluation toolkit. If you'd like to reach out to someone in my department or myself, I believe we would likely be happy to provide you with that toolkit. I should also mention though that toolkit is primarily geared towards professional technical contracting. So with Minnesota OSP, we have two divisions. We have acquisitions, that is goods and general services, and then we have our professional technical services, which are essentially intellectual in nature. And that evaluation toolkit is primarily geared towards professional technical services contracts. You're on mute, Chadwick.
Bound to happen eventually. Well, that concludes today's presentation. I want to thank our presenter, Jeremiah Alessio, for the valuable information shared today, for working with us here at NASPO to bring it to all of you. I want to thank everyone for attending this webinar. You'll receive a follow-up email containing today's slides and materials. Remember, this webinar qualifies as one contact hour for your continuing education credits. To receive your certificate, simply fill out the survey in your browser window once you've exited the webinar. This webinar has been recorded and will be available for viewing on the NASPO YouTube page in the coming days. Questions entered into the chat and Q&A boxes have been saved, and we will try to follow up via email for anyone's not addressed during the presentation. Don't forget to check out future webinars and other events at naspo.org. Want to thank Jeremiah again. Fantastic presentation, very thorough. And thank you to all our guests. Everyone, have a great day.
Thank you, everyone. Have a good one.